Hey, what's up everybody? Welcome back. Xavier here coming in with another video talking a little bit about the coronavirus and of course the effect on the market. Especially today, they're talking, futures definitely taking a dive down 400 pre-market um, on fears of what's going on with the coronavirus. As you're seeing more and more cases um, coming out of South Korea, it's going to pose a problem for different countries with different levels of healthcare to basically combat the virus. China, of course, have still continuing to have its own issues, bearing the large majority um, of the cases, of course. But now we're seeing, more cases going on in South Korea, and I'm sure we will find more and more cases in South Korea and in many parts of the world. And of course, it is and will have an effect on the markets. I think currently we're seeing maybe certain countries or maybe in America, we're not taking it too seriously, but we are seeing more cases in the United States. Where are we here? There you go, the US, 35. We're currently at 35 cases. And this isn't, of course, talking about the large number of people who are currently under quarantine. I think Korea just recently put 7,500 or 7,700 soldiers under quarantine. And of course, there are still a large number of US citizens who are under quarantine, especially those that came out of like these different cruise ships. So the market is going to be coming down a good 400 points. So we're looking at about a 28.5. I would say the market might repeat coming down to during the first week where we took a huge dip. You can see right here, we went down from 28.8 and we came all the way down to as low as just about 900 points. 700 points, excuse me. And I think we're actually going to see more of that. So if you're looking at, and of course this is in relation to, for those who have been following with M1, my M1 portfolio that I have been recently posting about. And so where am I going to be looking for pullbacks would be to around this level, would be to that around that 28.250, because that's where the market came down and bounced. So I'd watch the market and see how the market reacts to that level. Of course, it is important to pay attention to technical analysis, because like I said before, there's multiple ways of basically adding to your portfolio. Just picking, like you can make it so that like every Thursday it injects X amount of dollars, for people who are just like dollar cost averaging. But you can dollar cost average in multiple ways. One of them is just kind of like the set it and forget it, where it just automatically, today's Thursday, the money goes out and it initiates a buy, but you never know what's going on within the market. You could be buying at highs where the market is indicating that the market is looking like it's going to pull back. And of course, we can take advantage of what's going on within the globe now in terms of the coronavirus fears to put in orders where the market is going to be having some harsh pullbacks. In my opinion, like I said before, I think we will see a repeat to that 28.4, and if we do break the 28.4s, we'll more than likely come down post 28k. And you can see here from the market of course had a hard time breaking above that 26.8. You can see it right here. Two times it hit here. We see a subsequent re-rally with a sell-off, subsequent re-rally again with a sell-off, and again topping out at just a little over 27k. The market coming back down and then retesting again here. So you can see that there are pullback levels, and then you can see it again right here. Maybe a little difficult, but you can see right here where the market sold off and initially gapped down, coming back down to around that 27,250, and then bouncing back up. So there are definitely levels to watch out for within the way that the market is currently trending. And of course, what I would do is I would pay attention to, I would look back, like if your stock, for example, is in a Dow, or if it's in the Nasdaq, or if it's within a certain indice, I would pay attention to where that indice was, where that index was when the market pulled back during that week of the coronavirus fears. Where, for example, like looking at the, let's say like the Dow, looking at the Dow from the 30th, right? Excuse me, the 21st, the 31st, excuse me. And then looking back and seeing where your other stocks were, like whatever is in your portfolio, and then look back and see, go to January 31st and then see where your stock was. If the stock has made some sort of a bounce look back to where it was on the 31st and make your entry points somewhere around there. Like you see, if I was going to buy some more Foot Locker, I would want to put my in at around 38, maybe even a little bit below, because we know the market does panic and we do get some pretty hard drawdowns sometimes. For example, let's say like Foot Locker. Another one that I was holding would be like maybe EPD coming to a double bottom, etc. So I'd pay attention to where a lot of these positions were, pay attention to where your stock was, and I would literally try to come down maybe 15-20%, because like I said, sometimes the market would just push a little further down. You get a little bit of overselling. You might be able to snatch up some cheaper shares, and of course buying on the bounce of the once the coronavirus recovers, and people start to recover and they kind of act a little smarter in terms of limiting travel and interacting with large groups of people. Currently, we're not seeing that to the degree that we need to see it, and so that's why we're seeing the continuous spread of this virus. One, because a lot of people came out of China and were not quarantined or didn't indicate, like what happened in Korea, where they didn't indicate that they had traveled and then subsequently spread the virus to all these people, and then they took all of these people who had the disease and brought them into the hospital system, where they then come in contact with other workers, and then all those workers can come in contact with other people, etc., and so on. So once people realize that they need to be a little bit more harsher on their quarantine, we'll see the disease kind of taper and fizzle out, and of course the markets will go back to business as usual. But until then, it does give us the opportunity to kind of pick up some good stocks. Right, we're going to see some strong pullbacks in companies like like Apple, for one, looking like it's going to be gapping down almost $11. So a lot of these companies are going to have strong pullbacks as the market starts to indicate that it wants to sell off. You really just want to pick your points. Don't jump in immediately. There's always room. The market always has little bits of wiggle room before we kind of set sail back in the upward directions, if that is the direction that the market is going to be going. That's currently what I'm going to be doing with my M1 portfolio, as I start to see stocks start to make pullbacks in, like, for example, 3M or American Eagle, some of the stocks that I'm currently up in. I know that we're going to see things like Square, Tech's going to be hit. You might see a little bit of tech stocks get hit. I would definitely think stocks that are more affected, like oil stocks, will probably be hit, as well as the apparels, like GPS, because they're already currently under pressure. So stocks that are currently under pressure that may be poised for a little bit of an upward swing are definitely going to be hit hard. I would definitely pay attention to them. This is just my little bit of update for the morning. Hope you guys enjoy the rest of your day. Feel free to like, comment, and subscribe. And of course, if you have any questions, leave them down in the comment section. Feel free to do that, and then of course I'll answer those questions, any questions that you have related to M1 or in the market. Thanks for watching. I appreciate it. Take care. God bless.